evening, guys. You can see time is around 8:45. Let's look into today's Nifty 50 as well as Bank Nifty trade analysis. And you can see clearly in an intraday basis that after the market hugely gapped down, guys, the market showed some kind of bullish momentum. And what you can see, if you consider the low of this candle to the high of this candle, you can see rejection of price from 200 moving average as well as price taking support from 0.38 level, clearly signifying some sort of bullishness. So you can say this kind of rejection, you could have expected some kind of bullish momentum. And you can see how the market came all the way, gapped up on the next day, and again further gap up, guys, clearly showing a huge bullish momentum, 1,200 gap up, guys, which is, and even gapping above the previous high, you can see previous swing high, guys, clearly showing a very good demand, guys. And you can see even price after this kind of rejection from 200 moving average, the next day price closed above the 9 moving average, clearly showing some sort of demand itself. And you could have expected some gap up or some kind of bullish momentum, even though the market would have opened flat. But you can see how the bullish momentum here, the market gapped above the swing high, also clearly showing a very good demand, guys. And it's very difficult to target sellers, buyers over here, even though you could have expected some kind of retracement as today is expiry day. It's very difficult to target on all those buyers who might have entered here. So we should always look for sellers only, guys, due to the market gapping up too much. And let's look into a smaller time frame, analyze how the market has behaved. And the first thing what we do is to mark the mid of the first candle as well as the 5-minute zone over here. And you can see price is consolidating above the 9 as well as the 20 moving average, and price is trading above the day VWAP level, clearly signifying some sort of bullishness only. At this kind of momentum, guys, we should always look for buy setups, because in case if the market sentiment would have been bearish, the market after this kind of huge bearish candle, the market would have been trading below the mid of the first candle or the 5-minute zone and rejected price from the day VWAP level and might have shown clear bearishness with huge impulsive candles towards the downside. But here you can see how the market trying to take support from the mid of the first candle or the 5-minute zone. And here you can see the bearish impulsive candle over here, bearish engulfing pattern over here, clearly showing some kind of bearishness. In case if this bearish momentum would have been very significant, guys, and if you consider the high of this candle to the low of this candle, you can see market is trading below the 50 levels of this bearish impulsive candle. And in case if you might have taken short position here, you could have easily taken here and keeping your stop loss just below that candle. But here you can see even though the market broke the day VWAP level towards the downside, the market took support from the mid of the first candle as well as the 5-minute zone. And in case if the market sentiment would have been bearish now, guys, with this kind of huge selling pressure, the market would have easily broken this low, clearly indicating market structure shift from being bullish to bearish, and market would have clearly broke this structure. You can see a clear breakout structure in case if the market sentiment would have been bearish. Or what you could have done is to wait for reversal, guys. So after this kind of huge momentum towards the downside, you could have waited for the retracement. So in case if the market would have shown some kind of bearish momentum like this, and in case if the market on retracement moving in a very balanced way and rejecting price from the day VWAP level and continuing further, you could have, after this kind of bearish candle, you could have kept your stop loss above that bearish candle itself, and on the retracement, keeping your stop loss just above that bearish candle and targeting towards the downside. But you can see none of this has happened, guys. Immediately after this kind of bearish candle formation, you can see following by another bullish engulfing pattern over here. And even though the market here it closed above this candle as well, it's clearly signifying some sort of bullishness, guys. You can see a clear break of structure even after this kind of huge bearish momentum. And this is a very good confluence for you to take long position after seeing this kind of huge bullish engulfing pattern, piercing pattern, and market is closing above the 21 moving average, 9 moving average here, and breaking this VWAP level also, clearly signifying bullishness. So you could have easily entered long position here, keeping your stop loss just below this candle itself, a one candle of stop loss. Even though this candle is huge, guys, you could have easily taken long position. And what you could have done is to target the next liquidity, or if you consider this swing momentum, the high of this candle to the low of this candle, you could have targeted the 1.68 level over here, or you could have targeted this swing high, guys. You can see clearly the 1.68 level or the swing high are in confluence, and you could have easily kept your target level till this level. This is how you could have traded, guys. Keeping your stop loss just below this candle, and you could have targeted it all the way to this level. And you can see again the market showed some kind of bearishness over here, but followed by another bullish reversal. And this is to target all those buyers who might have entered here, guys, and initiate liquidity in market so that a lot of sellers might have would have entered. And if you consider this swing low to swing high over here, this swing, you can see price taking support from 550 levels over here. This is the 550 level where the market is taking support, and the day VWAP level. The market failed to break the day VWAP level towards the downside, and you can see further bullish momentum. And after this kind of bullish piercing the bearish momentum, you would have either entered another long position here, targeting all the way to this swing high as well. Or you can see clearly the market here also broke structure towards the upside, clearly indicating bullishness. This is a clear break of structure. And if we consider this swing momentum, the low of this candle to the high of that candle, you could have marked the 550 levels over here. You can see this is the 550 level, guys. And what you could have taken is that in case if you might have plotted the anchor VWAP level of this swing low here, which actually broke structure, you can see price rejecting from these levels. This anchor VWAP level helps in confluence with this kind of support over here, clearly indicating some sort of bullishness. And if you consider this swing momentum, which actually broke structure towards the downside, you can see the market here formed a chop, guys. Clearly, and the market even swept this high and formed a chop. You can see this high has been swept, and market could have formed a chop towards the downside. So what you could have waited is to wait for the reversal and to consider this swing momentum, the high common point within this, to the common point within this, and you could have marked the 550 levels over here. This is the 550 levels. And in case if your sentiment would have been bearish, the market would have clearly rejected price from these 550 levels and would have continued further selling towards the downside. But what happened here is that the market clearly broke this 550 level. And what happened is that the market even came all the way and even broke this swing high as well. You can see this swing high also, the market even broke this structure, clearly filling this order block level and showing some kind of dominance over here and buying pressure. So what you could have considered is that you can see this equal lows liquidity. You can see there is a clear break of structure over here with a very imbalanced or impulsive candle towards the upside. And if you try to plot the fib levels over here, the common point between this to the common point within this, you can see this is the 0.38 level where the market is taking support, as well as the 9, as well as the 21 moving average over here. You can see the market is trying to take support. And if you try to plot this swing level here, you can see the market, even after this bearish candle, the market is showing some sort of demand. So you could have easily entered long position here, guys, keeping your stop loss just below the 21 moving average, and you could have targeted towards the upside. So in case if you try to plot the fib extension here, the common point between this to the common point between this to the common point between this, could have targeted the 100% move, the 1.68, and you could have easily targeted all the way to this order block level, the 2.68 level, or as long as the market is moving above the 9 as well as the 21 moving average. You can see price here taking support from 21 moving average as well as the anchor VWAP level. Again, the market took support over here, and here it broke structure. But after this, the market formed a bearish engulfing pattern, and you can see this kind of momentum not showing as bullish as compared to this kind of momentum towards the upside. So you could have easily exited your position at 2.61 level. You can see, guys, how the market here went all the way to 2.61 level, and you can see multiple breakout structures here. You can see another breakout structure over here and another breakout structure over here as well. After this kind of breakout structure, if you could have plotted the common point between this to the common point between this, you can see price taking support from 550 levels here also. You can see this is a 550 level where price is taking support over here, and the market again broke structure towards the upside. And if you consider this swing momentum from the low of this candle to the high of that candle, you can see price taking again rejection price from 21 moving average as well as 50 levels, and market actually broke this high as well. And there was no proper demand over here. You can see this kind of liquidity over here, and there was only fair value gap over here. So in case if the market would have shown some kind of bullish sentiment, market would have rejected price from these levels and continue further bullishness. But this fair value gap has been mitigated, and the next internal liquidity is just liquidity over here. You can see this, and here is where the market actually formed a chalk, or you can consider the market structure shift after the market swept this high. So After this kind of bearish candle also, you could have easily entered short position because you can see the market has been overextended towards the upside. You can see this kind of huge momentum towards the upside. So you could have expected some kind of retracement even after this kind of huge upward momentum. And you can see the market sweeping this high as well as the market forming a chop. In case if you might have missed out on this target, no guys, you could have waited for chop formation. And if you consider the high of this candle to the low of this candle, you can see price rejecting from 0.38 level over here. This is the 0.38 level where price is rejecting. And in case if you try to plot the fib extension levels, the common point, the high of this swing to the low of this swing over here, and to the high of this swing, you could have targeted the 100% move over here, keeping your stop loss just above that candle itself. So what we could have done is to enter short position after this kind of rejection, guys. Or you can see here also the market is rejecting somewhere here, keeping your stop loss just above that candle itself and targeting all the way towards this 100% move. Or in case if the market sentiment would have been bearish, you could have targeted it all the way towards the downside. But you can see the market taking support over here and even breaking this high, clearly showing some sort of demand over here, guys. So if you look for confluence of here where the market took support over here, and if you consider in a 5-minute time frame and see how this support zone has been acted, you can see this kind of momentum, guys. Not so bullish, but definitely the market showing some kind of bullish momentum. And if you consider the low of this candle to the high of this candle, you can see this is the 50 levels. So you can consider that level also. But definitely the market, no guys. After this break of structure, you can see the market clearly broke this structure as well towards the downside. And this break of structure towards the downside was very balanced, no guys. You can see there is no fair value gaps here. So let's try to, you can see this kind of no fair value gaps and the market mitigated every zone over here. And even though after this kind of bearish momentum, and if you consider the high common point in this to the common point in this, you can see again market rejecting price from 21 moving average over here as well as the 0.38 level over here. The 0.38 level over here. You can see price is rejecting from these levels, guys. And you could have targeted this low and kept your stop loss just above this candle, or you could have tried your stop loss to this level, guys. You can consider this to be a trial lesson. So you could have tried your stop loss to above this candle over here after this kind of rejection. So after this, you could have tried it, and the market clearly broke structure towards the downside. In case if the market sentiment would have been bearish, no, the market would have continued further bearish candle like this towards the downside and reaching the 100% move over here. Or market would have taken support from this anchor VWAP level over here. This is the anchor VWAP level, or you could have expected price taking support from this order block level as well. You can see here there is an order block level where the market mitigated this order block, but again faced rejection from 21 moving average and broke structure towards the downside. But here you can see, guys, this kind of impulsive momentum towards the downside and this kind of impulsive momentum towards the downside. So let's try to decode this and analyze how the market here. You can see there is no fair value gaps here, guys. And the same here as well. You can see the same here as well. There is no fair value gaps over here, nor any imbalance over here, clearly signifying that the market sentiment is not actually bearish, guys. You can see both this swing over here and this swing over here, which actually broke structure towards the downside. But there was no imbalance over here, guys. You can see even this clear break of structure of this candle towards the downside, but you can see there is no imbalance over here. Here the order block. So you could have expected some kind of reversal only. But after this kind of momentum towards the upside, where the market here broke this 9 moving average as well as 21 moving average towards the upside and closed above this zone, you could have easily entered long position and you could have targeted this high as well. But that's only for very experienced traders, guys. But in case if you might have entered, it would be good, guys. You could have just scalped, and you can see the market even broke this structure high and formed a chalk formation over here, clearly showing some sort of demand over here, even after the market structure shift towards the downside. So again, what you could have done is to mark the 50 levels, the common point in this to the common point in this, and you could have waited for the support over here and mark the 50 levels in case if the market is showing any support at 50 levels. And you can see clearly the market kind of moved in a sideways. The market broke this structure high. Even you can consider this momentum, but this momentum is not so bullish, guys. And even this momentum is also not so bullish because there was no fair value gaps. There is no imbalance. So you could have expected the price to reject price from higher levels and continue further. But definitely here you can see the market here showed a very aggressive momentum towards the downside, where price rejected from 9 as well as the 21 moving average and even broke structure towards the downside, guys. You can see a clear break of this structure, clearly indicating a chalk formation and the market sentiment from rejecting price from these levels. Or if you consider this order block level here, you can see You can consider this is the order block level, guys. So Mm, this is a 1 minute order block. You can see how the market mitigated this order block, and there was a inducement level as well. You can see this is an inducement level, this is an inducement level. So you could have expected the market to continue further selling towards the downside, where the market rejected price from the 9 as well as the 21 moving average with this kind of candle. So you could have waited for retracement, guys. But you can see even this swing over here is not a imbalance move, guys. You can see there is a balanced move here where the market showed no fair value gaps, no impulsive candles. Even though this kind of candle is very bearish, you can see immediately the market reversed towards the upside and formed a chalk over here. Again, changing the market sentiment from being bearish to bullish, and you can see chalk towards the downside. When compared to chalk towards the downside, you can see chalk towards the upside, where the market swept with a fair value gap over here. You can see this kind of imbalance where the price didn't mitigate. So what you could have drawn is to mark the order block level. So this is the last down candle before the up move, and you could consider this to be order block, and the market came mitigated this order block, and you could have continued for the bullish momentum. And in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100%, or you can see clearly you could have targeted the 1.68 level over here. This is the 1.68 level, guys, where you could have easily targeted, keeping your stop loss just below this order block level over here. And this order block level is in confluence with 50 levels here as well. So you could have just kept your stop loss just above that below that candle and targeting all the way to 1.68 level. You can see how the market here formed a chalk, guys, but this momentum towards the downside was not very bearish. You can see even here there was some kind of bearish momentum where the market broke the structure with a fair value gap over here. And you can see how the market mitigated this fair value gap over here. But again, you can see this kind of trade setups, guys. I hope you're understanding what I'm saying. This was one beautiful trade setup where you could have taken, and this was another trade setup. This you could have tried your stop loss and you could have exited with a small stop loss. And definitely, this is one beautiful trade setup where you could have taken this. And here also you could have taken after this kind of extended move towards the upside with keeping your stop loss just above this candle itself and targeting all the way to swing low. So you could consider this swing over here or the order block level over here. So you could have considered it to be all the way to this level as well. In case if you might have been a very good risk to reward trader, keeping your stop loss tight, and in case if the market breaks this level, you should better exit the trade, guys. And you can see how the market is overextended towards the upside. So you could have expected some kind of reversal, and this momentum was the perfect entry for you to take short position. So you could have taken short position and kept your stop loss just above that candle, and you could have made a decent profit here as well. But here you can see this momentum towards the downside, this momentum towards the downside is not as bearish when compared to this momentum towards the upside, with market breaking the structures towards the upside with kind of imbalance candle, clearly showing some sort of demand, guys. So you should always look for fair value gaps or imbalance candles when the market is trying to break structure or forming a chop formation. And you should align your trade towards this direction only, guys. And in confluence with that, you should use anchor gap levels or the moving averages, and you should trade along with that moving averages only, guys. I think if you keep your trades very simple with minimum risk to reward ratio, only then you can be a profitable trader, guys, in a long run. So I hope you're understanding what I'm saying, and try to make use of that, guys, and learn to accept losses. I think once if you learn to accept losses, only then you can become a profitable trader, and let go of your ego, guys. And you should always learn to make mistakes, and you cannot always be perfect in every trade, guys. So you should learn to accept your stop loss. Only then you can become a profitable trader. Into Nifty 50 trade analysis, guys, as you can see, the market gapped up, and in Nifty 50 the market gapped up around 420 points, guys, clearly signifying some sort of bullishness. So what you can see is the market consolidating below above the 9 as well as the 21 moving average in both one as well as in a 5 minute time frame as well, clearly signifying some sort of bullishness. You could have taken short setup, guys, only in case if the market would have broken this low and the market would have come and broke this low, the first candle's low, guys, or in case if the market would have formed some kind of spin structure here and the market would have broken that low with imbalance of fair value gaps and with a clear order block levels, you could have considered towards downside. But definitely, as today was expiry day, you could have expected some kind of manipulation. So even after this kind of gap up, you could have expected the market to target all those buyers who might have entered here. But to target all those buyers, guys, who might have entered here, there is a huge gap up, and you can't expect the market to come all the way to these levels because there is a very good bullish sentiment. So what you could have looked for is where the market would initiate sellers to enter the market. So you can see this kind of bearish engulfing pattern, as well as the market trying to break this low as well. You can see a clear break of structure here, this swing over here. This is a clear internal break of structure, guys. But what you can see here is that if you consider this swing momentum, guys, there is no fair value gaps, no imbalance. You can see rejection of price from these levels, and there is no fair value gap here, guys. You can see the market is almost moved in a very balanced way. In case if this kind of rejection candle would not have appeared, and the market would have clearly broke this low, you could have expected the market to come all the way to this fair value gap and continue further buying, selling towards the downside. But you can see after breaking the VWAP towards the downside, this is the day VWAP level, guys, the black color line over here. After breaking the day VWAP level towards the downside, you can see the market current went all the way towards the opposite direction, towards the upside, and even broke this high as well. You can see a clear chalk formation over here with the market after breaking towards the downside, broke structure towards the upside, clearly signifying some sort of bullishness, guys. After this kind of impulsive candle here, breaking both 9 as well as the 200 VWAP level, you could have taken long position here itself and targeting this high, or you could have drawn this retracement levels, guys. In case if you might have considered this retracement level, you could have targeted the 1.68 level, but the market didn't reach all the way. But what you could have waited for is a retracement, guys. If you consider the low of this candle to the high of this candle, you can see market here rejecting price from 0.38 level. You can see here a clear rejection of price from 0.38 level. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move. This is the 100% move. But the market didn't reach all the way to this level. As you can see, the market here rejected price from these levels. So this level is the 0.5 as well as the 0.6 level over here. Here, usually there is some kind of profit booking at this zone, guys. You can see after this kind of price action. And what you can see here is that you can see the market consolidating throughout the day. Even though to consider it towards the downside, guys, the market didn't close below this level. You can see the market ejected price from this level. So only with this swing momentum, the market actually broke this level. But after breaking this level, you could have waited for retracement and look for short position. You can see clear break of this low as well. And this is a clear chalk formation, guys. To take short position, this is not a significant position, guys, because you can see this is a clear order block level over here, where the market mitigated this order block many times. After this kind of mitigation, the market actually broke structure towards the downside. So in case if you could have looked for short setup, guys, after this kind of swing momentum, you could have waited for retracement. So if you consider the high to low of this candle, you can see this is the 50 level, where the market here facing some sort of resistance and rejecting price from these levels, guys. And what you can see here is that the last up candle, you can consider this to be an order block level as well. You can see this order block has been failed as the market broke above this level as well. So even if the market break this level, as you can see, you could have expected some kind of chalk formation to look for short setups, but definitely the market here didn't form a chalk over here. With this kind of impulsive momentum, the market has to form a chalk with a single go. But here the market came all the way to this demand zone. Again, the market showed some kind of bullish momentum. After that, the market tried to break this level. But you can see the market retraced here, and you could have expected the market to continue further selling towards the downside, keeping your stop loss just above that candle. But you can see this impulsive candle, which broke the 9 as well as the 21 moving average towards the upside and came all the way to this order block levels, clearly showing a fail in this momentum, guys. And what that market formed is the order block levels here. Or if you consider this swing momentum, guys, the low of this candle to the high of this candle, it's better to mark the 50 levels over here. So you can see this is the 50 levels over here, where the market came all the way to this 50 level here, took support from here and continued further momentum towards the upside. So you can see this kind of support over here, where the market actually broke this towards the downside. So what you could have expected is that the market, after breaking this momentum with a very good impulsive momentum, the market retraced all the way to 50 levels, and you could have continued further selling towards the downside, or once if this impulsive momentum has been broken towards the downside. So if you consider this swing momentum is towards this retracement, the low of this candle to the high of this candle. So if you try to plot the 550 level, it is a 0.5. This is the 550 level. Once if this level has been broken towards the downside with a very good impulsive momentum as well as a fair value gap, you could have taken short position and you could have targeted towards the downside. But here you can see the market taking support from this zone, guys, of this retracement. You can see this kind of huge impulsive candles and as well as this 550 level support zone over here, clearly signifying some sort of bullishness. And again, the market here rejected price from these levels, continued all the way. But here you can see again rejection of price from the same lower levels, guys. You can see this is the low. Market swept this low and closed above this zone and formed a chalk formation. You can see this is a clear liquidity sweep, guys. You can see, or you can consider this to be a break of structure. I think both of them are same only, guys. And after this break of structure, you could have either enter long position. So if you consider this swing momentum, the common point between this to the common point between this. So if you consider this, you could have waited for support, guys, the 0.5 as well as the 0.6 level. But definitely the market didn't show support. Instead, the market here broke, found a breaker block level here. You can see this is a clear breaker block where the market broke the structure high. Again, the market retraced to this breaker block level, rejected price from this level. So you could have easily entered long position here, keeping your stop loss just below this 21 moving average. And what you could have done is to target towards the upside. So you could have targeted all the way to this level or the 100% move over here. You can see the market came and reached all the way to this 100% move, or as long as the market is trading above the 9 as well as the 21 moving average. You can see here the market actually broke structure towards the upside. This is a clear break of structure. And what you can consider is to plot this demand zone over here. You can see this, there was a very good demand over here. And this is some sort of demand, guys, where the market came all the way. And again, the market broke this high as well. You can see. But rejected price from these levels and closed below this level. You can see, guys, I told you about the sweep of liquidity. Market swept this low and broke structure towards the upside. Again, the market swept this high and broke structure towards the downside. And if you consider this swing momentum, the common point between this to the common point between this, you could have plotted the 50 levels over here, waited for retracement. This is the 550 level. After waiting for retracement, you could have expected the market to go towards the downside, keeping your stop loss just above that candle. And in case if you try to plot the fib extinction levels, guys, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move here. You can see how the market came all the way to this 100% move. Or you could have targeted this 200 moving average or the midway between the 100% as well as the 1.68 level. You can see this is the 0.5 level where the market came all the way to this level, guys. This is the 0.5 level. So you could have targeted it all the way to this zone over here, keeping your stop loss just above that candle. You can see even though the market not showing very impulsive bearish momentum, guys, you can see there is a very balanced move over here. And even though the market showed some kind of imbalance over here, the market came all the way to this 100% and showed some kind of bullish momentum. Again, price rejected from these levels and came all the way to this VWAP level or the midway between the VWAP as well as the 200 moving average or the 0.5 level. You can see. And you can, after this, the market clearly found a chalk over here. You can see with a very good momentum as well as a fair value gap. You can see a clear chalk as well as there was a fair value gap over here. You can see this is the fair value gap, guys, where the market came mitigated. And you can see the market even swept this low as well. But what you can see is the market here formed a channel pattern over here. You can see if you try to plot this candle over here, you can see after this kind of huge bullish momentum, again the market retraced and again showed some kind of bullish pressure. And you can see this kind of channel pattern after this candle, guys, which broke the 9 as well as the 21 moving average. And as well as here, there is a support of this daily VWAP level as well as the 200 moving average. You could have easily entered long position of this candle itself, keeping your stop loss just below that candle and targeting all the way towards the upside. And in case if you try to plot the fib extinction levels of this swing momentum, the common point between this to the common point between this to the common point between this, if you try to plot here, guys, you could have targeted the 1.68 level or you could have targeted it all the way to 2.6 level over here. This is the 2.6 level where you could have easily targeted it all the way to this level. So this is about the trade analysis where you could have easily taken where the market broke the 9 as well as the 21 moving average towards the upside, and there is a support of the daily wrap level as well as the 200 moving average support. Or in case if you try to plot your anchor wrap levels here as well, you could have entered your trade after this candle, which actually broke here towards the upside. You could have added on to your position here also, keeping your stop loss just below that candle itself and targeting all the way towards the upside. So you could have made a decent profit here as well, guys. But you can see this kind of momentum towards the downside. I think it's very difficult to make profit in this kind of momentum, guys, where their market momentum was not strong enough. So here the market didn't reach all the way to this 100%. Instead, the market came all the way to 50 levels. But if you might have holded on to your position, definitely you can see the market came. And if you see this, this is the 100% one, which is in confluence with 2.61 level as well. So yeah, that's it, guys. I hope you're understanding what I'm saying. In case if you find my videos helpful, please like, share, and comment. And keep supporting my channel, guys. And if you want to keep in touch with me, Instagram is a way to go. You can message me over there. Thank you, guys.